All right. So welcome. We had a little bit of technical issues there. That's what happens when you go live. I actually just adjusted my camera a little to the left and then unplugged everything and everything went crazy. So today we are talking about credit card stacking. We're talking about how to use credit card stacking to get quick access to capital. So if you're not familiar with what credit card stacking is and you are looking for an easy way to get money for a business, even as a startup, then you're really going to love this session because this is, of all the different types of funding we deal with, we're one of the only companies out there that deals with every legitimate type of business funding. Even stuff that we may do one loan a year, we still deal with it that way. The people, our clients, have the most options. And of every type of funding we deal with, this has more funding overall than almost every other one combined. It's that big of a deal to be able to help you get capital. And there's a lot of reasons it will probably work for you, not just to help you get money when you typically can't get it through other sources, but to also help you get the absolute most money at the best terms. So let's talk a little bit more about it. So first of all, what is credit card stacking? Well, we refer to this program as credit line hybrid, and there's a couple reasons for that. First of all, if you look at a credit card, the benefit of a credit card, there's a lot of them, but some of the benefits are that you get points that on purchases. You also get 0% rates, right? So credit cards are good because we can get 0% for 6, 12, 18 months. If we look at the benefit of a credit line, the benefit of a credit line is you can take cash out of the line without paying a cash advance fee that you'd have to pay on a credit card. So if I have a credit card with a $20,000 limit, when I go to take cash out on that credit card, I have to pay a 20% cash advance fee for taking cash out of my credit card. And I'm limited to how much cash I can take out. But if I did look at a credit line, I don't have to pay a higher interest rate. I pay whatever the interest rate is, whether I'm using the credit line to make a purchase or pulling cash out of the credit line. So what happens is a lot of people prefer credit lines because of the ability to take cash out. A lot of people prefer credit cards because of the 0% rate for like 18 months. But credit line hybrid and credit card stacking really can combine these two. And that's why we refer to it as credit line hybrid, because it's the benefits, a hybrid of the credit card, 0%, and credit line, where you're able to take cash out. You put those two benefits together, you're able to pull cash out of these lines, and you're able to do so at 0%. By the way, this is the only kind of funding program that exists that can give you truly 0% interest and can also help you take cash out at 0%. So you can imagine you're in a pickle, you need to pay payroll. Well, imagine doing that without paying any interest, or whatever it is you need to buy without paying any interest. A lot of benefits there. And by the way, Mike is in the house from St. Louis. Thanks for coming in. And Queen, just Queen, I love that, from YouTube is in the house. Good day to you. NBT is in the house as well. Expandimonium, got it right. Credit Suite Partner in the house. Thanks for coming in from Anaheim. And again, Queen, thank you very much for saying hello. Okay, so credit card stacking, what we're ultimately doing is we're combining the benefits of credit cards and credit lines. And the reason credit card stacking is a thing is because of this. See, major banks don't like it when you go apply with one and apply with another one and apply with another one. They don't like that you're out applying for a lot of credit in a short period of time. As a matter of fact, a lot of them see this as a red flag. Because what happens is you're out there trying to get money from Bank of America, from Chase, from Wells Fargo, from Regions all at the same time. And the bank's obvious fear and concern is that you're going to take $50K from them, then go get another 50 and another 50 and another 50 elsewhere, and then you're going to get overextended. So a bank is underwriting you based on what they think you can handle, right? So if they're going to give you $50,000, they think you can handle $50,000 and pay them back as agreed. But now they're concerned if you're applying at all these different places that you're not going to get 50, that you're going to get 50 here, 50 here, 50 here. And all of a sudden now you've got 250, 300,000 in extended credit all at the same time. You're overextending yourself, which lowers the probability you will pay them back. This is why banks, when they see other major inquiries on your credit report in 6 months or less, they are less hesitant to approve you for money. Or if they approve you, they'll approve you for less money. So if I go to Bank of America today and I get approved for $50,000 and I go to Wells Fargo in 3 days and Wells Fargo sees that I had that inquiry from Bank of America, they are inclined to not approve me at all or approve me for way less than I could have got if they wouldn't have had that Bank of America inquiry. Now you start adding them on, right? Now Bank of America sees that, Chase sees that. Now all of a sudden Wells Fargo inquiry comes up 3 days later. Now Regions Bank comes up 3 days later. So these banks, what happens is when you get to the third or fourth inquiry, they just stop approving you. They're just not going to approve you because it looks like you are mass applying for credit at one point in time. So that is fundamentally the problem with credit cards. If we didn't have that problem, then realistically, we could pretty much fund our entire business on credit cards. If I could go get 50 here, 50 here, 50 here, 50 here, all at the same time, I could pretty much fund my whole business this way. But the banks won't let that happen because when they see that I got 50 here, or they don't even see I got the 50, they just see I applied, then they stop approving me. So it makes it hard for us to go get approvals at 5, 6, 7, 8 different kind of lending institutions. This is where credit card stacking comes in. What happens with credit card stacking is you have typically experts in that industry, okay? They are experts at personal guaranteed 0% interest credit cards. They start as individuals and they end up ultimately building into companies like Seek Capital. Roy Furman, their CEO, is a good friend of mine. And Seek does a tremendous amount of business, right? Millions and millions and millions and tens of millions and hundreds of millions in funding and probably tens of millions or many times that of revenue, right? So they become big companies that get very good at this. They understand the ins and outs of credit cards. They understand every credit card Chase offers, every credit card Amex offers. They understand which credit cards pull TransUnion, which ones pull Experian, which ones pull Equifax. They understand which one will approve a 680 FICO, which one requires a 700 FICO, which one will offer you 0%, which one will give you the most points, which one will give you the longest period of 0%. They understand credit cards at a level that even I don't understand because I'm not an expert in the personal guarantee side. I'm an expert in the non-personal guarantee side, right? And definitely ways a novice would not understand. So what these companies have ultimately do is they basically are experts at going out to get credit cards. And what they do is they basically will find the right cards for you. And by the way, we're going to talk about you doing this on your own, just explaining this as a 10,000-foot view. So what they'll ultimately do is they will ultimately come in and they will look at an applicant. They'll know the best cards that will work for them. They'll set it up where they mass apply all at the same time for those cards. So what's happening now is that you get that Bank of America card, but then you immediately apply for Chase. And before Chase even knows that there's an inquiry from Bank of America, Chase is approving you for another 50. Then all of a sudden they go to Barclays Bank and Barclays gives you another 50. So all of a sudden, all of these credit issuers start approving you because the approvals are condensed and done ultimately at almost the exact same time. So one lender doesn't know that the other one has actually already done an inquiry, so they approve you as if that inquiry never even existed. And so that's why credit card stacking is so effective to get you so much money and well more than you get on your own. So one of our clients came up to us and said, I don't want to pay a fee for credit card stacking. I want to do it on my own. We said, okay. We helped him get his financials. He walked into his bank. He had 800 credit scores, but he only got 12,500 approved. Now, if he would have went through credit card stacking, he would have got $75,000 approved. So this is a perfect example of somebody that tries to do it on their own and gets 12.5, and then they could have got 75. Now, as you'd imagine, he comes back and says, I should have listened. I'm sorry, my fault, my mistake. Now I want to go through you. And our response is, it's too late. The minute you put that inquiry on there, the minute other banks can now see you applied, it's already too late to stack because that one inquiry ruined your chances of getting approved for maximum funding. Now, some lessons here. Don't use freaking inquiries on your personal credit if you don't have to. Stop. This is why I talk so much about building business credit. Because if you build business credit, you're able to get a lot of high-limit credit cards without a personal credit check. Now, to you, that may mean, good, I have damaged personal credit, so that helps me. To me, it means there's no inquiry on your personal credit. What you and I need to do is we need to protect inquiries on our personal credit report because we don't want to ever put an inquiry on there unless it's absolutely essential. We have to have the inquiry to get what we need. Because the minute we put these major bank inquiries on our credit report, we really hurt our ability to get other credit financing for 6 months' time. We just absolutely do. Now, you might say, well, hey, there's inquiry removal services. That is true. But, let's see here. Hopefully, is my video going okay? I'm currently searching. Okay, so hopefully my video is working okay because on my screen, it shows that I'm frozen here. So I got all kinds of issues. So let me see. Can everybody see my video okay? Or is it just me or am I completely frozen here? I think I am completely frozen. So let me see if I can switch cameras super quick. I'm having all kinds of technical issues today. So let me see if I can switch cameras here, get to a different camera. Okay, so there we go. So my apology. I like froze. You never freeze in a cool place. You always freeze in like a type of pose, right? Okay, so back to where I was. So what I was saying is that ultimately, when it comes to credit card stacking, what we want to do is we want to minimize how many inquiries we have in our personal credit report. The more inquiries we have in our personal credit report, the problem is the harder it is for us to get future credit and financing approvals. So whether you're hiring somebody that's an expert to do credit card stacking or you want to do this on your own, the key to credit card stacking is applying for all the credit at one point in time, okay? Now, let's expand from that. It's not just credit card stacking, okay? One of my buddies, Brandon, is the king of the stacking space. And what he does isn't just credit cards, it's loans. Now, what he advises is a deeper level to this. He'll actually have his clients go set up bank accounts at all these major banks. He'll have them start putting money in deposits and transferring money back and forth between accounts and do this kind of seasoning process for 3 to 6 months, then go apply for credit cards, loans, credit lines, everything at once. And a lot of times, he's able to get $300,000, $400,000 every 6 months for the clients. So that's how powerful this could be. Credit cards alone can typically get you $150,000 in approvals, quite a bit of money, even as a startup business. But if you start using the stacking strategy and you use it for loans and credit cards and credit lines, and if you're willing to do the work, you can legitimately get hundreds of thousands of dollars if you're taking an extra step of building relationships within those banks. We'll talk about that in a minute. So, a lot of benefits here. Frozen. Mike, I appreciate that. You are now I'm good. I got unfrozen, so I'm good. And like I said, nobody ever freezes in a cool pose. One day I'd like to freeze like this or like this, but I always freeze like this. I don't know about you. That's what happens when I freeze on the camera. Okay, so here we go. So what's the benefits of credit card stacking? First of all, it's fast access to capital. You're able to usually get approved and get funded in 2 to 3 weeks' time. Like you're getting your credit lines in 2 to 3 weeks' time. The second thing is it works really well for startups or people that can't verify their documents. So maybe your bank statements are not good. Maybe your tax returns are not good. Maybe you're a new business. If you cannot supply documents, then they work very well because this is no doc. So you don't have to supply income docs. So even if you have no revenue, you can still get this. It's also unsecured. And unsecured means there's no collateral required for approval. So what that means is it means I don't need stocks, bonds, 401ks, inventory, equipment, my house, no collateral is required. So now we're looking at this and we're able to get fast access to capital. We're able to get it without supplying a personal guarantee. That was completely a false statement. You do have to supply a personal guarantee. We're able to get it without collateral. We're able to get it without revenue verification, okay? We also don't need to have any revenue to be able to get it as well. Plus, we can get 0% rates for 18 months on our money. Then we can take the cash out of these lines at 0%. So if I'm a real estate investor, I can take $150,000 out of my credit lines at 0% and go and buy my property, right? Then I could pay off the property. Then I could, with a mortgage, get a mortgage paid off, get my money back, pay off my credit line, and go and do it again. That's called the BRRRR method, right? We're buying, we're rehabbing, we're refinancing and pulling the cash out. And then ultimately we're putting a renter in there and we're repeating the process. That's the BRRRR method, right? Because ultimately we're using this credit line at 0% to pull cash out, buy a property, do it again and again and again until that 0% period expires like 18 months down the road. So 0%, we're able to take cash out at 0%. We're able to get real usable credit lines that give us the flexibility of credit cards and credit lines where we can use them and pay it off and then be able to reuse it. Plus, we see that if you're asking for limit increases, you will basically double your money, double it every year. So when we have clients that come in and get $75,000 in credit card stacking approvals, then we tell them, hey, every 6 months at least, you should be asking them for a limit increase. Then what happens is about in a year's time, they've doubled those limits. If they got 75 in a year, that now totals $150,000 on those same credit lines. And that's because what happens is lenders like to compete. Lenders know that we typically keep our highest limit account in our wallet. So if Bank of America sees that they have a limit of $20,000 on a credit card for you, and then Chase has 25, well, then Bank of America is more inclined to raise their limit to 26 or 27 because they want to beat what limit you have at Chase. Because if they do, you're typically going to use it more often. And I had this happen once. Bank of America approved me for a credit line. I turned it down. They said, why? I said, because I have a credit line through Region that's way higher than yours. They said, well, how much do you want? I said, I want it to be the same or more. They approved me instantly for an increase to make their limit higher than the one I had through Regions because they want me to use it, right? So this is why these lenders and credit unions will ultimately compete and keep raising your limit every 6 months. So the money kind of doubles in 6 months worth of time. Okay. Another benefit is that a lot of these credit cards and credit lines report to the business credit reporting agencies. So you're building business credit at the same time that you're getting 50, 100, 150,000 in credit lines at 0%. So now that building a business credit is going to help you get other credit in the future without personal guarantees. And keep in mind that we're not just using it to build business credit. A lot of these credit lines that we're getting are 10 to 20 to 50,000 individual. So when that hits my credit reports, now I got 10, 20, 30, 40, $50,000 individual credit lines on my credit report for my business, multiple of them. So it expedites business credit building. It doesn't just help, it expedites it. It makes it faster than if you're not using credit card stacking, okay? Plus, it's really good short-term solution to a lot of problems. You might not want to constantly use this for long-term funding, but to get your short-term needs met, you have an acquisition opportunity, you have a marketing opportunity, you have an expansion opportunity, whatever those opportunities are, these are really good go-to methods to use for that. When COVID hit, we moved everything to the credit lines we got using credit card stacking. We stopped paying cash for anything. We moved everything to our lines to buy time to kind of figure out what was going to happen. Then when we felt comfortable, we started using our cash to pay off our credit lines, right? So it gives us these short-term solutions, these flexibility. Plus, again, we get those in 0% rates, but we also get perks. We also get cash back perks. So in a lot of cases, I can use our American Express and get 2 to 3% cash back. Now think about that for a second. I'm going to buy the stuff I'm going to buy anyways. I'm already going to buy my computer, right? But now I'm using Amex and now I'm getting 2 to 3% back on that purchase. So it's every time I'm using that, I'm getting a reward. I'm getting cash back. I'm getting 2, 3%. Well, look, that's a really big deal when we're trying to count our pennies to make more profit and to be able to make more margins. Because now we're getting 2 to 3%, sometimes up to 5% cash back on everything we buy. Sometimes we get discounts on some cards at office supplies. Sometimes it's with gas. Sometimes it's with hotels. Sometimes it's with airlines. Okay, I have many people in my circle that take their family on these phenomenal vacations multiple a year, and it's paid for just from their cash back rewards, all the points they're getting on these cards. So now you're spending money like you normally would, but you're getting all these incentives and rewards just for spending money like you normally would. And then there's also security features. There's all kinds of extra perks that you get by using those lines. So let me give you an example. Okay, I love to ski. I love to snow ski. It's my thing. And this January 1st of this year, I was snow skiing in Park City, and I had a pretty nasty fall and broke my shoulder. I actually dislocated it and broke my bone in 2 different places, right? Well, then 2 weeks later, I was supposed to go to France and ski. I can't go to France and ski when I've got a broken shoulder, right? So even though I was skiing in Park City, the days after I broke it, France is a little bit more treacherous. It's harder to ski there. So I have to cancel this last minute. Well, my hotel was $4,000 or $5,000. Right? So because I used my Amex card, I had protections, I was able to have built-in insurance and I got all my money back. If I would not have used that Amex card, I would have been out $4,000 or $5,000. So there's all these security things. There's extra perks in there too, with all these insurances, travel insurance, and things that are built into these credit cards and lines that make it easier for us to have some protections when we do things like book travel, for example. And by the way, L. Parker is in the house. Thanks for coming in. L. Parker is working and listening like you always are. And thank you for coming in and chiming in and saying hello. And Queen says, just bought gas to go get merch. I love that. Queen, I love you coming in and saying hi to everybody. That sounds awesome, Ty. I appreciate all your comments. So there's a lot of reasons we want to do credit card stacking, right? 0% builds business credit. It's unsecured. It's no doc. Hey, we're able to get approved without revenue. We're able to have all the flexibility. We're able to double the limits every year. We're able to get about 5 times more money than we'd ever get trying to apply for this kind of money on our own. We're able to get this money as a startup. It's fast money. It's easy money to get. A lot of benefits. So what does it take to qualify? Well, credit card stacking is only based on one thing, consumer credit quality. And it doesn't even have to be yours. Half of the people we help with this program are using somebody else's credit because theirs is not good. And if your credit's not good, it's okay. You're an entrepreneur. Like, you are a risk taker. Your credit probably reflects that you took some risks that didn't pay off. We're all the same way. I know too many entrepreneurs that got through unscathed with good credit through this journey, right? Like, my credit's been worse, more than bad more than it's been good. I can tell you, I don't know if you can relate. That's my world that I lived in the past, right? Till you finally get your business to work, and then you can start to fix some of those things. So again, what's nice about this is it's only based on consumer credit quality from a signer. So it could be your credit, it could be somebody else, a family member, a friend, an investor, somebody else who wants to be part of your business, earn a rate of return, whatever it may be. So you need to have about a 680 FICO score or higher to get approved. Now, the better your credit, the more higher your approval amounts will be. And oftentimes your approval amounts are based on the highest limit account you have right now. So if the highest limit credit card I have right now on my consumer credit is $20,000, I'm usually going to get 5 times that. So I usually get $100,000, 20 times 5, right? So I'm able to get $100,000 in funding. So now you have an idea of how much money you can get. You look at the highest limit account that has a limit. Some people say, I have a no limit Amex. I do too. But you got to look at the highest account with a limit, and you're usually going to get 5 times that amount from a major card, not like a Macy's credit card, but like a Visa MasterCard that shows on your consumer credit. You usually get 5 times that amount. Now, some things can limit the amount that you get. How many inquiries do you have in the last 6 months? I told you that they're a really big deal. The more inquiries you have in 6 months, the lower your approvals will be. The other thing is utilization. Now, utilization is another factor that will determine how much you'll get. They would really like you to have under 30% utilization. Utilization is your limits compared to your balance. They want your balance to be less than 30% of those limits. Okay, if it's higher, you can still get approved. You'll just get lower approval amounts. Now, the funding sources that do credit card stacking typically have inquiry removal people. So those people can go in and they can remove inquiries off your credit report. Although you have to be careful. I like to suggest that you only do this if the inquiries really were not ones that you knew about. Especially don't do this for any inquiries that resolved in credit. Because if you put an inquiry from Chase that got you credit, and then you dispute it with Chase saying it wasn't me, you can imagine that credit card or credit they gave you may be taken away. So you got to be careful. The other thing is that a lot of inquiry removal requires fraud alerts to be on your credit report, which makes it harder to buy stuff. Okay, I did that once, and then I am in Florida. I bought a car in Washington State. I swear to you, this is a true story. I had to fly from Florida to Washington State to sign the documents. I signed and turned around and flew back. I mean, it was crazy. I don't know, it was 17 hours of flying in that one day. I literally flew up there, looked at the car, signed it, and flew back. Because the fraud alerts created this risk where it made it harder for me to get money. You have to be careful about that. Keep that in mind for inquiry removal. These funding sources will also have bridge loans. And the bridge loans will help you pay down your credit cards. So if the funding source looks at it and goes, look, we can get you $50K now, or we can pay down credit cards to get you $120K, they'll give you a bridge loan to pay down your credit cards. Then they'll apply, then they'll get you higher approvals. Then you get your money and use it to pay off the bridge loan that was used to pay down your credit cards. So some additional services they offer, including letting you pull the cash out at 0%. So a couple things. One, you can absolutely do this on your own. You could build business credit on your own. You could credit card stack on your own. You could get funding at all these different banks and do what I talked about earlier, opening a bank accounts, moving money in between. You can do all that on your own. There's nothing that prohibits you from doing any of this stuff on your own. Now, obviously, if you're going to do it on your own, pretty steep learning curve. You're going to have to know the credit cards out there. You're going to have to know the ones that will work best for your credit type. You're going to have to know the ones that TransUnion pulled an inquiry, Experian inquiry, Equifax inquiry, which of your bureaus is the best. It's a shell game, but you could do it. You can go through FICO forums, and FICO forums, you can learn a lot about that. You can learn and I have a lot on my TikTok channel as well. Okay, if you look at and just at the hashtag or the ad is @businesscredit. If you go to TikTok @businesscredit, that's my TikTok channel. It's not even Credit Suites, that's mine, Ty Crandall's. And if you go to @businesscredit, you'll see I cover topics that say, here's the credit cards that pull TransUnion. Here's the one that pull Equifax. Here's the one that pull Experian. You go to FICO forums. You could figure this out and learn, and you could go and take a shot to apply and do it on your own. And you have to be careful because you got one shot, right? It's like M&M. You got one shot, okay? So 6 months is going to pass before you're going to get another shot because those inquiries are going to mess you up. So it's a learning curve, and it depends on how much you need the money. If you don't mind going through the experimental process, go learn everything there is to learn, go through, but just know that once you start those inquiries, you're out of the picture for 6 months to try it again. Now, the other thing is you could just use a funding source that does this. There's a lot of them out there that do it. Now, we can help you do this at no cost. We work with all those sources. So what I mean is that we work with all the people out there that do credit card stacking, and then we will look at your scenario individually, and we will say, okay, you should go to this lender or this one or this one or this one, and we'll direct you to the right place and help you get approved, to help you get discounts on what they charge and all the stuff. And we don't charge you a dime of money. Like, we're a free resource to help you there. And that's better than just choosing one and going with them, because we find that some sources won't approve you as well as others. Some will just get you all denied and they have to go through a process to get you approved. Some will have, there's all kinds of weird things between them. So what we'll do is look at your scenario, match it with the source, and we do that at no cost. And if you're interested in us helping with that, I'll pull this up. You can go to creditsuite.com/credit line, or CLH, short for credit line hybrid, or you can just scan this QR code. creditsuite.com/CLH, short for credit line hybrid, or scan this QR code. So you could do it on your own, go through the learning experience, FICO forums, etc., or you can go through a funding source. Now, the funding source is typically going to charge you upwards of 12%. We get our clients a discount, so it's like less than 10%. Let's just say it's like 10% fee. And they're going to roll it in to the credit lines you get, just like an SBA loan would. So if you go and get $50,000, then the funding source that got you that money will then charge you the $5,000. You get your $50,000 and you use it to pay your $5,000, and that's how it works. You ultimately are using the funding you're getting to pay the funding fee. There's nothing up front. If you're working with a reputable source, nobody should ever charge you up front. So that gives you some idea of credit line hybrid. You can go do credit card stacking on your own. We talked about how to do that using forums, things like that, to get the knowledge, which bureau is each lender pulling, which credit cards are the best one to apply for based on your scenario, your credit type, for example. How many accounts do you have on your credit? Do you have a mortgage? All those kind of things. You can figure some of that out. Or again, you can just scan this QR code or go to creditsuite.com/CLH. We'll look at your scenario and get you with the funding source that'll do it for you. Just know they're going to charge like 9.9%, and they're going to roll that into whatever funding you get. Choice is ultimately yours, but either one of those can actually work. So there you have it. That really is credit line hybrid. Now you know what it is, credit card stacking. You know why we do it, right? We're getting all these credit cards at once, so the inquiries don't ruin our ability to get more. You know that you can get $150,000 in funding pretty quick. Okay. Now I see sources out there that say they can get you $250K. I've never seen it. I've used those sources before. Not once did they ever get a client $250,000. That's why I just put out in the world the truth, which is that they're going to get you up to $150K. They're not going to get you more. Now in 6 months, you can raise the limits on the ones you get and get more. Every 6 months, you can raise the limit on the accounts you get and get more credit, more. So eventually that 150 can become $1 million if you repeat this process every 6 months. And that's what a lot of our clients do. So another benefit of credit line hybrid or credit card stacking is you can repeat the process and get more and more money. You get 0%. You can take the cash out at 0%. It reports to the business credit reporting agencies, helping you build business credit, right? You're able to get it no doc, no revenue verification as a startup. So again, based on consumer credit quality. So it either needs to be your credit that's good or another signer, but if that person's a signer, that's all that's needed. You don't need anything else in order to get approved. And then you know the two paths to go down to get credit line hybrid, to get credit card stacking. You can either do it on your own and go through FICO forums and those things to learn what's needed to be learned. Even look at Business Credit. My TikTok channel has a lot of advice that'll help you there as well. Or the second thing is you can just work with a funding source, have them, you're getting 0% rates anyways. So pay the 9.99%. They just roll it into whatever funding you get. So funding they get, you're only paying on what they get yet, right? Like a personal injury attorney. You only pay on what you're actually getting, and you can use the funding you get to actually pay it. So if you're interested in getting approved, now you know what you need to do. If you're going to do it on your own, check out Business Credit on TikTok. My channel there has a lot of the advice you're going to need to succeed. The other option is just scan this QR code and go to creditsuite.com/CLH. We can typically get you approved same day, get you to a funding source. They get you approved same day. And as we've discussed, you're typically getting your funding in about 2 to 3 weeks max. So now there you have it. Everything you need to know about credit card stacking to be able to use this as a powerful way to be able to get funding for your business. Life of Yannick says, hey, what's your thoughts on getting a secure credit card in until credit score is good? On the consumer side, you could definitely do so. I think that if you're going to build consumer credit, utilization or adding as much available credit to your credit reports as you can is the most important thing you can and should do. So I think getting any kind of credit you can get on a credit report will help you. In the business world, we don't really have secure credit cards. They just don't really exist. Wells Fargo had one back in the day. It's gone. So in the consumer world, that's a good thing to do. In the business world, that's not really a thing. And hello to everyone. Hope all is well. Thank you for coming in and saying hello. Revitz Patterson, I appreciate you saying hi. Okay, so I'm going to go ahead and wrap up. So there you have it. If you missed any part of this, go back to watch it in its entirety on the YouTube, Facebook, or LinkedIn, whatever channel that you're watching on right now. And if you got value from this training, smash the like button. Make sure you subscribe on the channel you're watching on. And don't forget, Tuesday and Thursday at 1 o'clock Eastern, we go live. Oh, and by the way, I got something big that I want to tell you. I don't know if I've actually brought this up or not, but we are having a challenge the last week of October. A lot of people, I think it's businesscreditbuildingchallenge.com, building challenge. I'm going to look this up real quick, challenge. Okay, a lot of people are big fans of our challenge because our challenge is 100% free. And we're going to walk through for 3 days and teach you everything that you need to know about building business credit. So you can check it out at creditsuite.com businesscreditbuildingchallenge.com. So make sure that you check that out. This is the actual challenge page. I'll pull it up right now so you can see it. So here you go. You can register. It's 100% for free. And if you go and check it out right now, it is at businesscreditbuildingchallenge.com. And this is where you can register 100% for free for the challenge. It takes place at the end of this month. So make sure you check this out because this is a powerful way to get everything you need to know to be able to build your business credit. So make sure you check that out. Make sure you like and subscribe. And we'll be back here live Thursday at 1 o'clock Eastern